Welcome to the Deep Dive. Today, we're going to be looking at HPE.
Okay.
Hewlett Packard Enterprise, some fascinating numbers coming out of them.
Yeah.
Their fourth quarter results for fiscal year 2024.
Right.
Those just dropped on December 5th.
Mm-hmm.
And we've got both their press release and their official SEC filing an 8K ready to dissect.
Excellent.
You know, for someone like me who isn't knee-deep in finance every day, these reports can feel a bit like a jungle.
Sure.
Oh, that's why we're here.
That's right.
Before we get lost in the numbers, though, can you just give us the quick rundown on HPE? What exactly are they offering in the tech world these days?
Well, HPE is really trying to cover all the bases, in the enterprise tech world.
Okay.
They're offering solutions for hybrid cloud environments, artificial intelligence, even traditional networking. And on top of all that, they're in the midst of acquiring Juniper Networks, which could really shake things up in the industry.
Juniper deal. We'll definitely dive into that
go on.
A little bit later. But first, let's talk about these fourth quarter results.
Okay.
HPE is touting this as a record-breaking quarter, and they've got the revenue numbers to back it up.
Yeah.
$8.5 billion.
Wow.
A 15% jump from last year.
That's impressive.
That's impressive on its own.
Right.
But especially considering, we're still recovering from some economic uncertainty.
Yeah, it's definitely a sign of strength, especially when you consider that backdrop of potential volatility.
Right.
But what's really interesting to me is the annualized revenue run rate, or ARR, for their consumption services.
Right.
Think of it as their GreenLake cloud platform.
Gotcha.
That number has skyrocketed 49% to hit $1.9 billion.
Wow.
This tells us something much bigger is happening than just a good quarter.
Okay, so I get that ARR is important, but can you break it down for me and for our listener a little bit more?
Yeah.
Why is this specific metric so crucial for understanding HPE's strategy, particularly with this focus on cloud services?
Well, ARR is all about recurring revenue, which is the lifeblood of any subscription-based business model, like cloud platforms. A 49% jump means that customers are flocking to HPE's GreenLake, and they're not just dabbling, they're committing for the long haul.
Wow.
It signals that HPE's strategic shift towards as-a-service offerings is gaining real traction.
So it's not just about selling a product anymore. It's about providing this continuous service.
Exactly.
That's fascinating.
Yeah.
Of course, revenue is just one side of the coin.
It is.
Let's flip it over and look at profitability.
All right.
HPE reported a GAAP-diluted net EPS of $0.99.
Okay.
A whopping 102% increase.
Huge.
And even their non-GAAP diluted EPS came in at a solid 58 cents.
Right.
Up 12%.
Solid.
Those are some pretty stellar numbers.
They are, but to really understand them, I think we need to look at both GAAP and non-GAAP side by side.
Okay.
Now, I won't bore you with a long accounting lecture.
Please don't.
But in simple terms, GAAP follows all the strict rules, while non-GAAP allows companies to exclude certain costs that they believe don't reflect their core operations.
Okay.
For HPE, this helps us see how their core business is performing, stripping away the noise of one-time expenses related to their, ongoing transformation efforts.
That makes sense.
Yeah.
So while the GAAP earnings are impressive, the non-GAAP numbers give us a clearer picture,
I think so,
of their day-to-day business performance.
Yeah.
But here's where things get a little less rosy.
Okay.
Their gross margins, both GAAP and non-GAAP, are actually down compared to last year.
Interesting.
How can that be with revenue shooting up like a rocket?
That's the million-dollar question. It could be a few things. Maybe they're facing higher input costs due to supply chain issues, or pricier components, or perhaps they're strategically lowering prices to grab more market share, especially in their rapidly growing segments.
Okay.
To get a clearer picture, I think we need to delve into how each part of their business performed this quarter.
Okay, let's do that.
Right.
HPE breaks their business down into segments.
They do.
And each one tells kind of a different story. For example, their server segment is absolutely on fire.
Wow.
32% year-over-year revenue increase.
Nice.
But on the other hand, their intelligent edge segment, which focuses on the Internet of Things and edge computing, took a 20% hit.
Oh.
That's a pretty stark contrast, what's going on there.
To understand these swings, I think we need to look at the broader market trends. The server market is probably experiencing strong growth overall, fueled by the increasing demand for data processing and storage.
Makes sense.
HPE's performance suggests that they're capitalizing on this boom effectively.
Okay.
But the intelligent edge market might be a different story altogether.
Okay.
Perhaps competition is heating up, or maybe there's a temporary slowdown in adoption.
Right.
We need to compare HPE's numbers to their competitors to really see if they're gaining or losing ground in this space.
And in a move that surely made some investors happy, HPE announced a dividend of $13 per share payable in January 2025.
Okay.
This is particularly interesting because it's the first dividend for their 2025 fiscal year.
Yeah.
Does this signal a strong sense of confidence in their future prospects?
It certainly sends a positive message. Okay. Declaring a dividend, especially at the beginning of a fiscal year, often suggests the company expects strong and consistent cash flow.
Right.
Enough to reward investors and keep the business humming. It indicates HPE believes their strong performance isn't a fluke, it's sustainable.
So it's not just a good quarter.
Right.
It's a statement about their long-term vision.
Yeah.
Before we get into their specific projections for 2025, let's take a closer look at this Juniper Networks acquisition.
All right.
It's been approved in several major regions, but the U.S. Department of Justice is still reviewing it.
Right.
They're expecting a final decision and closure early 2025, which feels like forever.
It does, yeah.
Yeah. This is a massive deal that could reshape HPE's future.
Sure.
What are your thoughts on how it might play out?
Well, the implications are huge.
Okay.
Juniper has a strong foothold in specific networking niches, particularly in service provider and cloud environments, which are only going to grow in importance as our world becomes even more interconnected.
Right.
This acquisition could give HPE a significant edge in those markets.
And this is a big but.
Yeah.
Is focusing so heavily on hybrid cloud and acquisitions a risky move for HPE?
That's a good question.
Could they become so laser-focused on this one path that they miss other opportunities or become too big to adapt quickly if the tech landscape shifts?
It's the classic innovator's dilemma.
Okay.
Do you double down on what's currently working or spread your resources and risk diluting your efforts?
Yeah.
HPE's leadership clearly believes hybrid cloud is the future, but they'll need to stay agile to avoid being blindsided by, unexpected technological shifts.
Okay, so there's a lot to unpack here.
There is.
We've got this incredible revenue growth driven by a strategic shift towards cloud services, but also some concerns about shrinking margins and potential risks associated with this laser focus on hybrid cloud. Plus, there's this looming Juniper acquisition.
Big one.
But before we dive deeper into all of that,
let's
take a closer look at their financial reports.
Right.
Starting with the SEC Form 8K.
Okay.
What are some of the key details that jump out at you?
One thing that immediately catches my eye is the impact of their transformation costs, which have been a recurring theme for the past few years. These are primarily costs related to restructuring and streamlining their operations. And they've definitely impacted their GAAP earnings.
So it's like they're taking a short-term hit to position themselves for long-term success. Kind of like investing in a gym membership.
That's a great analogy.
You pay now for future gains.
Yeah. These transformation costs represent investments in efficiency, agility, and innovation. They might temporarily impact their bottom line.
Right.
But they're essential for HPE to remain competitive and adapt to a constantly changing market.
Their Form 8K also gets into the nitty-gritty of their non-GAAP adjustments.
Okay.
It's fascinating to see how they exclude certain costs like stock-based compensation and amortization of intangible assets to present what they consider a truer picture of their ongoing operational performance.
Yeah. These adjustments are common practice in financial reporting.
Okay.
But it's crucial to understand why companies make them.
Okay.
HPE argues that these excluded costs aren't truly reflective of their core business activities. For instance, stock-based compensation is a non-cash expense, while the amortization of intangible assets reflects the gradual decline in the value of assets that they acquired through acquisitions like the pending Juniper deal.
But doesn't excluding these costs paint a potentially misleading picture?
That's a valid point.
These are real expenses they have to deal with.
Right? They are, and it highlights why we always need to look at both GAAP and non-GAAP numbers. Non-GAAP adjustments can be helpful, but they shouldn't replace GAAP entirely. It's like reading a restaurant review that raves about the food but fails to mention the terrible service or cramped seating. you need the full picture to make an informed judgment.
So GAAP and non-GAAP each tell a part of the story.
Right.
And it's up to us to piece it all together.
Exactly.
What else does the 8K reveal about HPE's overall position?
Well, it highlights some of the risks and uncertainties they're facing, too.
Okay.
One that really stands out is the potential impact of ongoing geopolitical tensions.
Like what?
Especially the relationship between China and the U.S.
Right.
This is a concern for any global tech company. But HPE, with its extensive international operations, is particularly vulnerable to these shifts.
Right.
Changes in trade policies, tariffs, or even outright conflict could disrupt their supply chains, impact their sales, and create a whole host of new challenges.
So it's like they're navigating a minefield, trying to keep their balance while avoiding any potential explosions.
Right. And it's not just external factors they need to worry about.
Wow.
The 8K also points to internal risks.
Okay.
Like managing their increasingly complex product portfolio and staying ahead of the innovation curve.
Right.
HPE is a massive company with a wide range of offerings.
Yeah.
Keeping all those balls in the air, balancing innovation with efficient execution,
Right.
and making the right strategic bets is a tall order.
Yeah.
It requires strong leadership, a clear vision, and the ability to adapt quickly to changing market conditions.
Speaking of adapting, there's still the uncertainty surrounding the Juniper Networks acquisition.
Yeah.
While they anticipate closing the deal early next year, there are always potential roadblocks and unexpected delays.
Sure.
Merging two large companies is a monumental task.
It is.
And any hiccups along the way could impact HPE's performance.
Absolutely. The Juniper acquisition is a bold move with inherent risks.
Okay.
HPE will need to manage those risks carefully,
Right.
ensure a smooth integration process, and effectively leverage the combined strengths of both companies to achieve the anticipated benefits. It's a high-stakes game, and the outcome is still uncertain.
It sounds like HPE is in the middle of a high-stakes poker game.
It does.
With a lot riding on their strategic bets.
Yeah.
They got a strong hand with their record-breaking revenue and aggressive push into hybrid cloud.
Sure.
But they'll need to play their cards right to avoid any costly blunders.
Absolutely. The tech landscape is constantly evolving.
Right.
Success today doesn't guarantee success tomorrow.
No.
HPE's leadership will need to remain vigilant, adapt to changing dynamics, and make smart strategic decisions to position themselves for sustained growth and profitability in the years to come.
We've covered a lot of ground here.
We have.
From HPE's impressive fourth quarter results and strategic moves.
Yeah.
To the potential risks and uncertainties they face. There's a lot to think about.
There is.
But before we move on,
Okay.
I want to circle back to you, our listener.
Yeah.
Given everything we've discussed so far, what are your initial thoughts on HPE's performance and their ambitious plans?
Yeah.
Are you optimistic about their future, or do you see potential red flags?
Good question.
Hold that thought.
Okay.
Because we're going to keep digging into this and see if we can answer some of those questions together.
That's a great question to keep in mind as we continue this deep dive. There's a lot more to explore. Picking up where we left off.
Okay.
Let's delve deeper into those 2025 projections.
Right.
HPE is forecasting continued revenue growth in the mid-teens for the first quarter, with non-GAAP diluted EPS projected to fall between $0.47 and 52 and 52 cents.
Okay.
Those projections seem pretty optimistic, especially given the lingering economic uncertainties we talked about.
Right.
What are your thoughts?
Well, on the surface,
those
numbers definitely paint a rosy picture.
They do.
Continued revenue growth in the mid-teens is nothing to sneeze at.
No.
But like you said, the economic outlook is still a bit murky.
It is.
What specific factors could throw a wrench in their plans, even if they execute everything perfectly?
Well, one major factor is the competitive landscape.
Okay.
HPE is playing in a field crowded with giants like AWS and Azure.
Right.
Not to mention other legacy tech companies scrambling to adapt to the cloud era. Can HPE realistically outmaneuver them all?
That's a good point.
Yeah.
You mentioned earlier that HPE is tailoring solutions for specific industries.
Yeah.
But isn't that exactly what companies like AWS and Azure are doing as well?
Yeah.
How can HPE compete with their massive scale and resources?
That's where their differentiated approach comes in. They're not just offering like a generic cloud platform.
Right.
They're leveraging their expertise in both hardware and software to provide a more integrated and optimized experience. tailored to specific industry needs. They're aiming to be a trusted advisor and partner, not just a vendor.
So it's not just about selling the picks and shovels in the cloud gold rush.
Right.
It's about being the experienced prospector who knows where to dig.
Exactly.
And how to extract the most value.
Right.
That makes sense.
Yeah.
But even the most skilled prospectors can hit a dry spell, right?
They can.
What are some potential pitfalls HPE should be wary of? Even with a solid strategy in place.
One challenge is the relentless pace of innovation in the tech world.
Yeah.
What's cutting edge today can become obsolete tomorrow.
Right.
HPE needs to stay ahead of the curve. Anticipating new trends and investing in emerging technologies.
It's like they're running on a treadmill that keeps getting faster.
It is.
They can't afford to slow down, let alone stop.
Yep.
So they need to be constantly innovating.
Right.
But they also need to execute flawlessly on their current plans.
Yeah.
Like the Juniper integration, which is no small feat.
Exactly. Integrating a company the size of Juniper Networks is a massive undertaking, fraught with potential challenges. Cultural differences, operational hiccups, and unforeseen obstacles can arise, potentially derailing even the best-laid plans. HPE's leadership will need to be on top of their game to navigate these complexities and ensure a smooth transition.
So they need to be nimble innovators, expert integrators, and strategic masterminds all at the same time.
It's a lot.
That's a tall order.
It is.
But let's step back for a moment and think about the bigger picture.
Right.
We started this deep dive wondering if HPE's big bet on hybrid cloud is paying off.
Right.
Based on everything we've discussed so far. What's your take?
Well, the numbers certainly suggest that their strategy is gaining traction. They're seeing significant revenue growth, particularly in their cloud-based offerings, and they're making bold moves to solidify their position in key markets. However, there are also some valid concerns.
Like what?
Shrinking margins, potential integration challenges, and the ever-present risk of disruption in the fast-paced tech world are all factors they'll need to navigate carefully.
So it's a mixed bag. A lot of promising signs, but also some potential pitfalls to watch out for.
Exactly.
What do you think, listener? Are you leaning towards optimism or caution when it comes to HPE's future? As we head into the final stretch of this deep dive, keep those thoughts in mind.
Good idea.
We're going to explore some final takeaways.
Okay.
And leave you with some food for thought. All right, so we've covered a lot of ground in this deep dive into HPE's performance and their ambitious plans.
We have.
We've seen impressive revenue growth, a clear strategic focus on hybrid cloud, and a bold acquisition on the horizon.
Yeah, a big one.
But we've also uncovered some potential challenges, from shrinking margins to the ever-present risk of disruption in the tech world. So as we wrap things up, let's bring it all together. What are the key takeaways here, and what should our listener be pondering as they watch HPE's story unfold?
I think the biggest takeaway is that HPE is in the midst of a major transformation. They're not just trying to keep up with the cloud revolution. They're aiming to lead it with their Green Lake platform and their acquisition of Juniper Networks. This is a high-stakes gamble, but they're clearly committed to it.
And that commitment seems to be paying off.
It does.
At least in terms of revenue growth.
Yeah.
But I keep coming back to those shrinking margins.
Yeah, that's a good point.
Is that something investors should be worried about, or is it just a temporary blip as they invest in this transformation?
It's definitely something to keep an eye on. As we discussed, it could be due to a number of factors, including higher input costs, pricing pressure, or even strategic decisions to sacrifice some short-term profitability to gain market share. The key question is whether they can maintain this growth trajectory while also improving their profitability over the long term.
So it's a balancing act.
It is.
Grow too quickly and you might stumble.
Right.
Focus too much on profits and you might miss opportunities.
You could.
It's a tough spot to be in. But HPE seems to be navigating it with some degree of success so far.
I think so. They're doing okay.
Okay.
And I think a lot will depend on their execution.
In what way?
Can they successfully integrate Juniper Networks without major hiccups?
Right.
Can they continue to innovate and stay ahead of the curve in a rapidly evolving market?
Mm-hmm.
And can they manage their complex and growing portfolio while also maintaining financial discipline?
Yeah.
These are all critical questions that will determine their ultimate success.
It sounds like HPE's future hinges on their ability to juggle multiple priorities and adapt to a constantly changing environment.
It does. It's a lot to handle.
There's a lot riding on their ability to execute their ambitious plans.
There is.
As we leave our listener to ponder all of this, what's the one big question they should be asking themselves about HPE's future?
I think the question is this. Can HPE truly become the leader in hybrid cloud and edge computing?
Okay.
Or will they get squeezed between the public cloud giants on one side and the more specialized niche players on the other?
Right.
Only time will tell, but it's going to be a fascinating journey to watch.
And that, my friend, is the perfect note to end on.
I think so.
We've taken a deep dive into HPE's world.
Oh, Rev.
Explored their impressive results, their bold strategy, and the challenges that lie ahead.
That's right.
But the conversation doesn't end here. We want to hear from you, our listener.
Yes.
What are your thoughts on HPE's prospects?
Yeah.
Are you bullish or bearish on their future?
Good question.
Share your insights and predictions on our social media channels.
All right.
And until our next deep dive, keep exploring, keep learning, and keep questioning.